we have some breaking news. According to NBC News, Andrew Puzder, who is the president's nominee for Labor Secretary, will be withdrawing his nomination, or the White House will withdraw his nomination. Again, this is according to NBC News. There had been previous reports that top Senate Republicans were urging the withdrawal of Puzder as Labor Secretary because of concerns regarding his moderate immigration policies, his previous hiring of undocumented immigrants as household employees, a messy divorce as well. So we'll keep you posted on any developments, but in the meantime, the latest headline here is, according to NBC News, Puzder will withdraw his nomination, or the White House will withdraw his nomination to be Labor Secretary. All right, let's get you back to the Trump administration and the president's agenda in his first 100 days. We want to get some more perspective now, and for that, we go to a special guest with our Kathleen Hayes. Kathleen?
Scarlett, thank you so very much. And that breaking news playing right into the topic with our next guest, Paul Krugman, a man who almost needs no introduction, professor of economics at the City University of New York, that's CUNY. He is also a New York Times columnist, conscious of a liberal, and of course, a Nobel laureate. He won that Nobel for his work on trade. But I just have to let you respond to the breaking news.
Yeah, it's, we're having as much news in every day as we would normally have in the course of a month. Puzder was a very, very weak nominee, but you were wondering whether anything could derail one of these nominees, and I guess there was just too much stuff accumulating. And look, maybe they'll actually nominate someone in his place who is actually believes in the mission of the Labor Department. Is actually pro-labor instead of being basically an anti-labor guy.
Well, isn't labor that the Labor Department head is not one of the most important cabinet posts, correct?
Well, right. It's not. It's strategic, but there's a lot of things that hinge on it. I mean, there's a lot of policies, the more modest policies, things like enforcement of rules, enforcement of the law on union organizing, enforcement, and of course some of the most important statistical agencies. The BLS, which we rely on so much, is under their aegis. So it does matter whether you have somebody who cares about the mission.
Well, Paul, let's cut to the chase to a certain extent. Through your columns, through your tweets, we know that you are adamantly opposed to much of what Donald Trump has done, what he's said, and what he's proposing in terms of policy. But I want to ask you this. You're an economist, so now you've got to assess the economy. Is there any scenario for you where Donald Trump's fiscal policies work? Tax cuts on the wealthier and on middle and lower income people, maybe they do lead to more investment, more jobs. That's one. Infrastructure spending, we get some done. It goes through quickly. That creates jobs. And maybe you reform Dodd-Frank, which many people say has hurt lending to small businesses and hurt community banks. Is there any positive scenario for you in that?
Well, I've been arguing for a long time for fiscal stimulus, and the case is a lot weaker now than it was a few years ago because we do look like we're fairly close to full employment. But we're probably not all the way there, and there's an insurance argument for fiscal stimulus, because what if there is a downturn, monetary, interest rates are still very close to zero, having a little bit of extra oomph. So fiscal stimulus, even a really badly constructed fiscal stimulus, could be a good thing. Now, it's really badly constructed to the extent we have any idea what the policy is going to be. But sure, there's some case for that. It's not now infrastructure. Yeah, I mean, that's a tremendous case for it, but a large infrastructure build. But we don't have any proposal, and the closest thing we have during the campaign was something that really would have generated almost no new infrastructure investment. It was really a privatization scheme disguised as an infrastructure scheme. There wasn't a lot of government spending in there at all. So I don't really believe in that part. Dodd-Frank, no. There's zero evidence that Dodd-Frank is holding back the economy. There's a lot of evidence that it's been doing good. All of this push to undo Dodd-Frank is just a way of setting up the next crisis.
Well, but small business lending, and in fact, the share of it in C&I loans has shrunk from about 36% to about 19%. Small business employment is down. I think there's a compelling case being made that there are places where bank regulations are hurting retail customers like small business, as in it's through this small business lending channel.
Remember, there's a regular survey of small businesses where they're asked about their problems, and the fraction who say that they're having any problem getting loans, that they're, is near a historic low. There's just no evidence. Everything we can see suggests that the reason that they're not borrowing is they don't have stuff to spend on. You're really reaching to find something that the very people who should be complaining about it are not, in fact, complaining.
So is the Fed wrong-headed to think it should start raising rates? In fact, Eric Rosenior from the Boston Fed said that we could need more than 3 rate hikes this year. Janet Yellen seems to be on board with 2 or 3. Doesn't know when she's going to start. Are they heading in the right direction?
I wouldn't. I mean, I understand the reasoning. They're not stupid, but I think we're still probably not at full employment. Inflation is still not at the 2% target, and the 2% target itself is questionable. And there's a really strong case for letting it overshoot a bit, for getting, as I think I was the first one to say it, not for, don't shoot until you see the whites of inflation's eyes. So I would not be doing this. They're making 2% look not a target, but a ceiling. And that's a very bad thing, given the kind of weakness we've seen in the economy over the past 10 years.
Well, if the economy's that vulnerable, why not give it some more fiscal stimulus through infrastructure spending?
Well, that's right. I mean, if it was infrastructure spending, and then if it was a real infrastructure plan, then I would have to endorse it. But I think some Senate Democrats have said, we're all for it. Give us a real infrastructure plan, which is a safe challenge because there's not a chance.
What's the risk of the Fed starting to hike rates? What if they move in March? I think now the bet is the biggest
Right.
bet, soonest bet is May.
Right. So suppose that they move, and it turns out that something bad happens. There's, the economy slows down. Maybe some of the markets decide that maybe that Trump bump was not actually a good idea. Something happens to China, whatever. And the economy starts to slump. And meanwhile, we've had a signal that the Fed views 2% as a ceiling, not a target, which means that monetary expansion, cutting rates, is going to be much less effective than it might have been if the Fed had given a different signal. So you just set yourself up. I mean, if you follow other countries that have been at the zero lower bound like us, there are repeated stories of abortive rate hikes. That happened in Japan, it happened in the euro area, and in both cases they clearly damage their credibility by hiking rates and then undoing it. We really don't want to go down that route, and I'm afraid, I don't know this, but I'm afraid that that's what Janet Yellen may be doing.
Let's switch to trade. We've got a lot of questions for you on trade, so let's get started. Now, Donald Trump, one of the first things he did, pull out of the TPP, wants to work on bilateral deals. Instead, he and Prime Minister Abe look like they've agreed to move forward on something. The U.S. already has free trade deals with Australia, Singapore, South Korea. Why won't these bilateral deals be a good idea for the U.S.? Why won't they be a success? Or will they?
Well, they might be, except TPP was a funny deal because it wasn't really mostly about trade. It was mostly about intellectual property and about dispute settlement. And bilateral deals don't do as good a job of that because they don't establish a common rule. And there's a problem with bilateral deals, which is that they do add complexity. And my old teacher, Jagdish Bhagwati, likes to talk about the spaghetti bowl. You look at all of the deals, and that's a real cost for business. It's a real thing that discourages trade. So, it's not the worst thing in the world. With all the things going wrong, a proliferation of more bilateral trade deals would be like 25, 30 on my list of things to complain about. But it's not clear what is supposed to be happening there. What are we supposed to be getting that we weren't going to get?
Well, maybe you get South Korea to buy cars.
Yeah, they really don't. We've already made some deals of that kind. I mean, and I think that actually the notion that the way to promote U.S. exports is to sort of go around yelling at people they need to buy our stuff, that may make for some good political theater, but you need much more pervasive policies, and among other things, you need a sustained budget deficit policy is not good for U.S. exports.
Why?
Because it means higher interest rates here, it means a stronger dollar, and it ends up translating into a wider trade deficit.
Paul, I want to turn this trade question to Asia. I just got back from a trip to Hong Kong and Asia. Scarlett, of course, well versed with Asia. She lived in that part of the world for many years and worked there too. But RCEP, people are talking about the Regional Comprehensive Economic Partnership. It includes China, Japan, Vietnam, and more. Is that a threat, quote unquote, to the U.S.?
Well, I would have said it's mostly a geopolitics threat rather than an economic threat. I mean, it's not likely to be any kind of tight economic integration. These countries are just too diverse and too distrustful of each other in fundamental ways. But it does mean that to the extent that there's rule setting, we won't be at the table and China will. And to the extent that there's just a general sense of who are you looking at. When people, I had lots of conversations about TPP, and the question for Obama administration people was, why are you doing this? The economic case is really not all that compelling. And they always said geopolitics. We have to be at the center of this stuff, and not going to happen.
But here's what quick focus here. If the U.S. is not in your trade deal, What are you going to do as an exporting current account surplus country? You got to sell to somebody. We're the biggest consumer in the world. Isn't that leverage in deals with China, in leverage in a deal with the EU where Germany is so trade dependent? Isn't that the reason why people are going to have to deal with the U.S. and deal with Trump?
Well, they'll all have to deal with. Nobody's going to cut us off. Nobody's going to say, oh, we don't, But what are we going to do? Are we actually going to go and I mean, maybe under Trump, maybe we'll go, start just breaking our commitments, say, rip up the WTO and start imposing tariffs. But that's a heck of a step. And as my old teachers used to tell me, the danger is not retaliation, it's emulation. The whole system falls apart if we do that. So are we willing to go down that route? Maybe. But if we're that crazy, then I don't think, the leverage is going to matter one way or the other.
This is a question on a lot of our eco team here at Bloomberg News Mind. A question from my fellow reporters, Craig Torres, asking about NAFTA. Why hasn't Mexico been able to move up the value chain more substantially? Why is it exporting low labor costs? Why haven't they developed intellectual properties? Doesn't it show this was simply a low-cost wage arbitrage for American companies where both American and Mexican workers really didn't win? I think that's the big rap against a lot of these trade deals. Multinationals win, their shareholders win, but workers didn't.
I think if you want to make the case for Mexican benefits, you really want to look at you need to look at Mexico regionally. If you only look at those 5 northern states of Mexico, it get a very, very different story. One piece of Mexico actually has converged significantly on the U.S., so it's not zero. Now, it's still disappointing, no question. People who thought that Mexico was going to be the next South Korea have been very, very disappointed. And then we have to ask, well, okay, it turns out that just being open to international trade isn't enough. And Mexico has problems of infrastructure, has problems of education, it has problems of corruption. Development is tricky. No one really knows how to do it, and NAFTA by itself wasn't enough. Now, for the U.S., to some extent it's wage arbitrage, but some of that is actually helping U.S.-based enterprises compete with third parties. So I'm not going to claim that it was a great thing for workers on either side of the border, but it's certainly not the demonic thing that some people portray it as.
I want to ask you about the border adjustment tax. In the sense of, in part, its supporters say it's very important in Paul Ryan's budget plan, because if you want to cut taxes, you have to pay for that. And one very low-cost way to do that is with a border adjustment tax. Do you agree?
Well, it's not really low cost, right? A border adjustment tax is paid, an import tax is paid by U.S. consumers the same as any other tax. It's the idea that it's somehow going to fall on foreigners or anything. It's just a different tax. And there are different kinds of border adjustment tax. There's the kind that everybody that has a VAT has, where it's really just part of a sales tax. Then there's this really, the DBCFT, which is a real triple naproxen concept. It's very, very serious headache-inducing. But there, it's much more complicated. But again, it's not clear that it's any kind of real revenue alternative. It's just a way of shuffling around who bears the corporate profits tax. And in the end, since the end of any, at the end of these proposals is always going to be that U.S. corporations end up paying less, and that means that U.S. consumers are going to end up paying more. Paul,
is there anything the U.S. can do to bring manufacturing jobs back to the U.S.? Are they lost for good? And if they are we forever doomed to have a large trade deficit?
No, but fundamentally, being our basic international economics, the reason we have a trade deficit is it's the flip side of a financial account surplus. It's because money is flowing into the United States that we're selling IOUs to the rest of the world, and therefore we have to be buying manufactured goods. The balance of payments always balances.
Should our dollar adjust? Is our dollar part of the problem?
Well, the dollar is a symptom also. The U.S. is an attractive place to invest, partly because of the weakness of economies elsewhere. I don't think there's very much you could do. Most of the decline in manufacturing in the U.S. is not trade anyway. Even when all is said and done, some of it, but most of it not. And if you wanted to head for an eventual balanced budget, that might do something about the trade deficit, but that would conflict with a lot of other goals that the current government has.
Well, we're going to have you back.
Okay.
The first 100 days of Trumponomics is we're only halfway through.
Oh, I'm sure there won't be any major shocks for the next 20 minutes or so.
Okay. Paul Krugman, thank you so much for joining us here.